Hi there traders, it's Giles here from Kingdom Trade, and I just wanted to run through with you a trade I've recently taken on the Aussie New Zealand dollar pair, because it's a good example of showing how technical and fundamental elements come together to make a really solid trade. Now, first of all, let's look at the technicals for this setup, and you can see the technicals for this setup is we have a green crossing red signal on the Traders Dynamic Index, and we have a candle here. This is the first color change candle after a cross of the green and the red. If you remember from earlier videos, I like to take the first or second candle after the green crossing red, and there's a further technical element to this setup that just puts things in our favour. Sorry, that's just an alert. So that puts things in our favour. And one of the things a couple of things here. First of all, you see this long rejected tail of the average price bar. That's a really good indication that price has been rejected and bought up all this distance. And you can see that that was a false break of an inside bar. You see these two previous days that price shrunk down, then tried to make a break of that inside bar and was rejected and bought up all the way back. So it closed on the day inside that inside bar. That's a very well-known pattern. It's a false break of an inside bar. But what's interesting technically is then you have this large surge to the upside, and you have this bar, the next bar, which is also the cross of the green over the red, closing above that inside bar pattern. So now we know that the buyers are most definitely in control. Now this was the trade that I entered in yesterday. I entered it here at this point, and I'm now sort of about sort of 30-40 points in profit. And my first target is going to be in this region here. That's the 200 moving average, and that is a very large resistance area. So my first target is going to be in this area, and I'm going to pull my stops to break even and just see if we burst through that. Now that's the technical reasons for this trade. The fundamental reasons make this even more compelling. And the fundamental reason is that on the 9th of November, Governor Graham Wheeler of the New Zealand Bank, they cut the interest rate. And that cut interest rate suddenly meant that the New Zealand dollar lost value against the Australian dollar. Now, simultaneously, the Australian dollar has been gaining traction with the uncertainty around Clinton and Trump. Commodities have really surged, and when commodities are doing well, the Australian dollar is doing well, and in fact the Australian dollar is doing generally well. So all of a sudden you have this quick divergence appearing between the two central banks. The New Zealand Central Bank, where things are looking more bleak, interest rates cut, looks like interest rates can be cut for a long time, and the Australian Central Bank, where things have taken a sort of a slightly better turn with recent data looking quite good, commodities rising. So all of a sudden you think, this could easily be a bottom for the Aussie New Zealand dollar pair, as you've got this divergence, and you can see that price is indicating that. It's showing the surge to the upside as the Australian dollar gains value against the New Zealand dollar. So this was just a good trade because it really shows an example of when the technicals and the fundamentals come together, and they just make a really solid trade. I was really confident taking this trade. It was a really obvious setup, and I'm really confident that we're going to be hitting that area soon. And as soon as we hit into that area, I'm going to pull my stops to break even, and that's a risk-free trade. Well, I hope that helps just get another sense of how I'm trading. Once again, for those of you who are following, my stops would be, my emergency stop would be here underneath this long tail. That would be my emergency stop. But the place where I'd actually exit the trade would be if price dropped, went over and closed in this area. That's the sort of area that I will be looking to say, no, come on, this is not going in the right direction. I'm exiting the trade. But it'll be a close on the daily time frame. I don't just want to see price go into that area, because If it happened intraday, price easily gets rejected up. I'm looking for a close, which is a bigger signal, and it lets you know, yeah, come on, price is really pulling down. It's time to bail. I don't need to wait for my stop to be taken out, but I've got the stop there in case I do need it, and that is a very sensible thing to do. So just you get a sense there of how I'm trading, get a sense of what you can expect, and also you're going to know where I'm putting my stops. But again, if you're following me on Zulu Trade, you need to realize that I will be bailing out if price goes into that area, because I won't just try and take my full loss. Now I'm risking 1% of the account in this, so this is a 1% account risk. So I'm not overly emotionally attached to this trade. It's not a big deal. I'm not losing sleep over it. It's just business as usual. So if you're following me, make sure you're imitating the way I'm trading. Make sure that you're putting, about 1% of your trade involved. Now, obviously, I trade 3, 4, 5 positions each. So you want to be having, each of those positions about 0.1 to 0.2% of your account is the best way to make these reliable trades without, losing sleep over huge swings in your equity. Okay, I hope that helps you know how we trade, and I may come back a few days later and update how this went. Okay, thank you for watching, and I hope this helps you know how I'm trading. Goodbye.